Our guest speaker today is Ron Farrel. Now, I've known Ron for a long time. There really wouldn't be anyone in this country who would be more knowledgeable and experienced as far as insurance is concerned. And here I'm talking particularly in relation to general insurance. He's basically had a lifetime in the industry, in senior positions, including an involvement with the Government Insurance Authority, which is called the Victorian Managed Insurance Authority. I think we're all conscious of the fact that, firstly, insurance is necessary, particularly in relation to our homes, contents, etc., and perhaps motor cars. And those that have been in professional life are aware of the need for professional liability insurance. We're also aware of the fact that it seems to be getting more expensive, and we also are aware that it's become somewhat political because it's affecting people's situation in terms of finances. And then, of course, Australia being what it is subject to natural disasters such as floods, such as bushfires, which then raise issues about insurance, whether there is insurance or whether it's adequate or whatever. So Ron can tell us all about that and give us his perspective on it. Would you like to make him welcome?
Morning, everyone. Thanks for having me. Peter McCarthy made me laugh when I can imagine the 15-year-old Peter McCarthy joining what was known as Cairo, Central Army Records.
Yes, yeah.
My father also worked there. He was a military man in his later life. Talking of insurance, I started in 1954, 11th of January 1954, which is a way ago. And I was also 15, just like Peter. And from there on, I commenced a career which I absolutely loved. Every day I was in the industry. So I left it only a few years ago and had kept my hand in, even though I retired from the company that I worked for, delivering the tea tray to start off with and in the end running the company. So times change. Never did I believe that I'd see a headline like that appear, which for those that may be a little deficient in the sight line, it says APRA, which is the Australian Prudential Regulatory Authority, flags growing threat to insurance affordability. I didn't ever imagine I'd see that. Then I saw this little report, which I printed out, which says rising cost and unavailability of insurance. And that comes from the Senate committee report last year, November last year, out of Canberra. And it also talked about the role of insurance in the event of a disaster. So all of these aspects are becoming sort of a day-to-day talking effort in the community. But if we think about it a bit further, we probably bring it down at my stage of life or your stage of life to thinking about, the bloody house insurance is just falling due and the price has gone up, or my car insurance is now more expensive than ever. Or if you've still got a few business interests, you may own a property or two or something like that, you find that the costs now exceed what you're getting as rent, and you say, oh, I'm out of this. Well, insurance has some massive effects on the community, and little do most people realise how extensive those effects are. So this is the latest figures, and you can't read it, so I'll just show it to you. These are the latest figures that have been produced by the Australian Prudential Regulatory Authority, December 2024. And I'll refer to those a little bit later. So what I'm trying to talk to you today about is insurance without its technicalities. So firstly, has anyone here ever been in the insurance industry? Yeah.
Life insurance though.
He was in the, well, I was also in the life insurance industry. Okay, someone from the life insurance. Well, I'm not going to talk about your specific topic today. Is there anyone here who's never bought insurance? You've all bought it, so you've all got an involvement. Has anyone here either purchased or renewed their car, house, or contents insurance recently? Is anyone here? I notice a couple of hands are not going up. There must be a reason for that you haven't renewed or purchased a policy. Yeah? Okay. Maybe it's because you thought it was too expensive. Maybe you thought the insurance companies rip off the customer and they only play their own game. Or do they make excessive profits? So if you had $100 and we're going to put it in the bank tomorrow, what return would you expect for that $100? Well, if you don't think about it too much, the bank only pays you about 0.1%, I think. But if you've got any brains whatsoever, you're putting it in an account which probably gives you about 4.75%. Would I be right?
Yep.
Okay. So, and some people are even shrewder than that, and they put it in other venues that give them a higher return again. So how does that compare with your thinking of insurance companies and the return they make on their net assets? How much do you think they return? Could we have a bit of thought round the table? Do they make 4%? Do they make 6%? Do they make 10%? What's your thinking?
10.
I reckon they make 10.
You reckon about 10% on their money is what they make.
On their capital.
On their capital. On their net assets. Well, the figures at December last year, which were produced by the Australian Prudential Regulatory Authority, was that they produced 4.4% return on their net assets. Okay? So it's not much different to me putting my $100 into the bank and getting 4.75. It's about that figure because it goes up and down from year to year. But importantly, when you put your money in the bank, you are a bit careful, aren't you? You really look at your money, because it's my money, and you look at it and say, what's the risk if I put it with that authority or that bank or that? What do? You worry about the risk ratio, don't you? Because there is a risk when you put it through. Even if it's one of the major 4 banks, there's still a risk. Well, to the degree that the government backs them. But there's a risk. And when you move outside the 4 or 5 major banks, the risk can increase greatly. So when the insurance industry makes 4.4% return on its net assets as of last December, your risk to the risk ratio, when you put your insurances with them, prescribed by the government, works out at 1.8, or for every dollar exposure, there's at least a surplus of 8.8%. So you're well and truly protected by the Prudential Authority as to the risks that are being placed. And the government, when I first started in the industry, anybody could start an insurance company. The requirements were about, as long as you had a capital of $5,000, it might have been a little bit higher than that, you could start an insurance company. Look at what Larry Adler did. He was a taxi driver. He started that insurance company on peanuts. But he saw there was a bit of an opportunity, so he jumped in and created FIA Insurance Company, which eventually went down the tube badly. Why? Because they were greedy. They didn't put the money aside to protect in the event of a claim. I'm diverging a little bit because today I'm really talking about the rising costs of insurance as they'll apply to the majority of people here, and its availability. So I'm going to talk about car, home, and contents insurances. Health insurance, life insurance, and business insurance I'm not going to refer to, but I think the lessons that I'll apply here today apply equally to health, life, and business insurance. And the reason I'm doing that is because of the community ramifications, the wide community ramifications that apply to those three types of business. It's all bad news. The Federal Parliamentary Senate Committee reported in late 2024 that the cost of insurance for these three types of insurance has risen far beyond what could be expected. The price rises have exceeded inflation and wage growth. So if you're buying your house, car, or contents insurance, the price has grown greater than inflation plus wage growth. Have a guess what it was over the past decade combined?
24%.
92%. 92% over the past decade. And in recent years, it's been 16% increase year on year. So here's the average Joe on a standard income trying to buy his groceries and all the rest of it, and then he's got the car insurance and the house insurance, and maybe contents insurance, and he's trying to meet the bill for the cost rises that's occurred in the industry. But let's go back to the industry. What I said before is, remember what the industry was making as a return on its net assets, 4.4%. It wasn't as if these most massive price increases have arisen and the insurers are creaming it off. It's not. It's because the costs have risen. The Australian Institute of Actuaries estimates that 15%, that's 1.6 million of the Australian population, or Australian households, were experiencing insurance affordability stress, and about 5% of these had mortgages. Standard & Poor's estimates, and they've projected these figures, that if 1/3 of these stressed households dropped coverage, and 1% of that 1/3, 1% of that are affected by a catastrophe, the banking sector could face 200 million in credit losses. The effect of insurance across the society is enormous. And you worry why the banking sector is trying to protect itself. It's doing these numbers all the time and seeing what exposure they've got. A market assessment, well, I just got to go back a step. Most of you would know that, like a bookie, the insurance industry lays off its risks. So it lays off its risks to what are called reinsurers. And normally reinsurers hold a large proportion of the Australian risk. So the Australian capital exposure is well protected by the 1.84 exposure limits, and the reinsurers bear the rest of the risk. The global reinsurer, Swiss Re, estimated that there is now a protection gap in Australia of, in American dollar terms, $12 billion that's uninsured or doesn't have a protection gap, is what they call it, a protection gap. The protection gap is the difference between the cost of recovering from an event and the insurance that's in place. 12 billion US. Choice magazine, you all know Choice magazine, it reports that the benefits of insurance are increasingly out of the reach of many. I'd like you all to tell me why this has occurred. Would anyone like to venture an idea as to why it's occurred? Come on, there's got to be something you've got a thought.
Global warming.
Climate change. It's a result of climate change. Now, I first attended my first lecture on potential climate change in 1974, and it was the managing director of BP Worldwide gave that lecture here in Melbourne. And he explained to us what the effects were going to be. From a personal experience point of view, I experienced Cyclone Althea. Do you know where Cyclone Althea was? Townsville. I experienced Cyclone Althea in 1971. What was the outcome of that? The outcome of it was we rebuilt half the town because we used to be related to one of the major permanent building societies in Townsville. We made a decision, that's the insurance industry made a decision at that time, not the council, not the government, not the federal government. We made a decision at that time that if we were repairing any houses in Townsville, and this is in 1971, remember, that we weren't going to just rebuild them as they were prior to the cyclone. I think the winds got up to 240 kilometres an hour. A lot of flat roofs, so they were blowing all the flat roofs off. The old houses that were built in 1890, they all survived. But the ones that were built in more modern times, the roofs disappeared. So what we decided, we would rebuild all roof or on the houses and cyclone-proofed the roof, or cyclone-proofed the house, as they called it, and we bolted the roof to the floor or to the foundations. So that was done by the insurance industry off its own bat, paid for mainly by the reinsurers who were involved. The next one I got involved in, you probably don't realise this, but the company I worked for, we used to have 3 accounting dates. We used to account in June, 30th of June, standard Australian accounting, but because we were a subsidiary of an English company, we had the 31st of December as a second accounting period. We also had a third one because we had some American assets, and so we had to produce 3 sets of accounts every year. But for our purposes of managing our operation here in Australia, the 31st of December was the key one. So you were always looking at your monthly results and hoping that you'd get to the end of the year without something happening. Well, Cyclone Tracy came along, on the 23rd of December or something like that, I think it was?
24th.
24th. So we were looking great. I can remember looking at the accounts and saying to the staff, we've done really well this year. Bingo. Because we had 20% of Darwin insured. That was the last time we ever wrote a risk in Darwin. We withdrew from the market in Darwin. But as a result of the Darwin episodes, the building regulations were changed. Now the government stepped in, thank God, and now they build, all the houses in Darwin have to be cyclone proof. Then at the end of the year, in 1974, we had a double disaster, the Brisbane floods. Now the Brisbane floods, we built a new building in Eagle Street, Brisbane, while I was there in Queensland. And lovely new building, perfect part of town, Eagle Street. If any of you know where Queen Street, it's just behind Queen Street in Brisbane, the main street. And I remember that the basement was filled to the roof with floodwater. On the driveway down into the basement, that's where they put a substation. Of course, it filled the substation up and put all the electrical system out. But we decided we should have our offices right on the top floor to get the best view of Brisbane in those days. Now we've got how many thousand claims? I'd hate to tell you how many thousand claims. This is just our company alone. And we had to get the staff in every day. The building was as hot as hell. There were no windows, a modern building, fully air conditioned. I had to walk up to the 12th floor every day to get to work. I had to work in these horrendous conditions and deal with all these claims. The problem was the phones were also out. So how could people ring them to report they had a loss? Bit difficult. The manager decided he had the answer. So he initiated a system of flags up on the roof. You might think this is a joke. This is true. He initiated a system of flags on the roof where a red flag was not covered, a green flag was covered, a yellow flag was maybe covered, or I don't know exactly what. And they had somebody perched on another building somewhere which you could get to because the floodwaters weren't there. And then they'd convey that message by phone or whatever it was between them. It was an absolute disaster because companies weren't really prepared for something like that to happen. They might have been prepared. They thought, oh, well, if we have a claim, they can ring in and we'll fix the claim up. But when you can't get into your own building, so there's, I'll deal with that just a little bit later because APRA is taking some action to ensure that doesn't occur again. But because of climate change, APRA are now estimating that the insurance industry has to provide $1 billion Australian, at least $1 billion Australian per annum as a payout for a catastrophe. That's APRA estimating it. Then you've got to bring that down to the individual companies and start thinking, how are they going to deal with this? How are they going to provide sufficient capital to balance this up? They can do it, but you can imagine how difficult is the decision to set your prices. The direct effects of this are premiums are rising, which we're all seeing. Consumers have to decide whether they're going to pay the price, reduce their cover, or opt out completely and take the risk themselves. And when you think of those three options that they've got, you also have to think of the protection gap that I mentioned earlier. The protection gap in Australia is estimated at 12 billion USD. 12 billion. So a lot of people are not insured. Then there are those that only take partial insurance, that they think, oh, well, we used to take, we'll pick the car to begin with. We used to have comprehensive insurance before. So in the event of loss or damage to the car, you get it fixed. Oh, hey mum, can we afford it? Have we got any money in the... I will say, oh, no, we've got to buy the groceries this week. Got to do this. Oh, well, let's not take full cover like comprehensive insurance. We'll just take third party only. And we'll cover ourselves in the event. So maybe they halve the cost. So now, in the event of damage occurring to the car, they've got to pay for it themselves. Are any of you living in an apartment building? None of you live in apartments? You all live in England, I'm sure. I'll just give you an idea of apartment buildings. I live in an apartment in Malvern. We live on top of a hill. The chance of us ever getting flooded, 0. The chance of us having a major event, unlikely. What's the major risk, do you think, for us living on top of the hill in Malvern? What would you think would be the big one? What do you think will be the big one for us?
Fire.
No, not fire. Concrete building, it's fully sprinkled. Anyone got any idea? Earthquake. Earthquake's the big risk because the fault line, the big fault line runs across the bay, right? Across the bay and comes through the city of Melbourne. Right? Earthquake. How many of you worry about earthquake? But the risk's there, and the insurance company's got to put the money aside for it. But that's the biggest risk. That's the big claim risk. If I lived in Brighton, it'd be flood. Nobody's saying flood, because on every title in Brighton, there's a caveat at the bottom of it that says this is subject to water inundation or something like that. And there are other areas around Melbourne that's similar. Now, just going back to living in the apartment block, the government try poorly, in my opinion, and I'm not talking any one government here, I'm just talking government generally, they try and legislate to protect people who are living in apartments. And what they require is that every 5 years it is obligatory that the owners corporation that runs the building, and it's a statutory body, must have a valuation done on the building, and the sum insured that they buy for their building insurance must be related to that valuation that's done every 5 years. With our building is, I think it's insured for about 80 million currently. But when we first set the sum insured, I think it was, we were doing it every 3 to 5 years, but we tried to get ahead of the market because the CFMEU were saying, hey, if we need to do this job, we want another 40% in wages, and the materials cost was going to go up, and all of a sudden, to wait 5 years was absolutely stupid, because the values are rising so rapidly in the building industry that we were being left behind. And if we'd have done it continued to do as per the legislation every 5 years, we would have, and had an event, say at the 3-year mark, we would have been so underinsured, it wouldn't have been funny. Now my guess, you blokes, most of you will own your own houses. And if you own your own homes, you're probably not aware that you need to look at your sum insured every year. And don't just think, oh, that's enough. You've got to really understand what's happening with costs. Costs are they're rising in the building industry for domestic dwellings. And the pressure that's coming on them, because they want more and more built, right? So the builders are able to say, well, yeah, we can do the job, Mr. Government, we'll build you another 10,000 houses, but the pressure's just going to be on and on, because the labour costs and materials costs are going up. But anyway, so consumers continue to scream, don't they? And I can understand why they're screaming. They're seeing it's out of control. And then you get governments that are saying, oh, well, we understand the board of the Flemington Racecourse, the VRC, I suppose it is, we understand that they really need protection for their assets, because we want to run the Melbourne Cup nicely and have flowers and all the rest of it. And it's a real important thing for Melbourne. Yes, we'll let you build the wall. So what did they do? They built the wall around the Maribyrnong to protect the racecourse. They forgot the people are on the other side of the river. They forgot the place. So they're those people on the other side of the river. The water's up to here. in their bedrooms. Okay? How are they going to get insurance next year? They may get paid out this year if they had flood insurance cover. I hope the hell they have. But how are they going to get, it's an insurance company going to step in and say, oh, we'll insure you next year? I'm not. Right? And neither is the rest of the industry. So, pick another example. Pick some low-lying land. You're the developer. This is cheap. I bought some low-lying land, but no, don't forget about the low. We'll drain it a bit here. We'll drain it. And now we can sell it. And we'll sell it for the standard price. We won't reduce it because it gets wet every now and again. No, off we go with the development. The development happens. Everybody's in their nice little homes that are now on 400 square metres, not like Eaglemont, where they're on 800 or 900 or 1,000 square metres. They're on 400, so they're all tightly jammed in now. The next thing, a flood comes along. They wonder what's happened? So they then look to their insurance company to say, we need to get insurance for this. Well, insurers have all of a sudden got smart, and they're saying, oh, but that land is subject to inundation. Oh. How are they going to provide protection? Oh, the bank comes along and the bank says, we won't give you a mortgage without your insurance. I don't have an answer to it. But I think somewhere along the line, the government definitely got a responsibility to say, you can't develop that land. No? But they need the land. They need to do it. Right. If cover is offered at all, premium costs are seen as prohibited and unaffordable by most people. Let's jump to car insurance. Car insurance has a lot to do with the reduction or the building of cars, has to do with a lot of ideas about the reduction in greenhouse gases. So how did they start approaching that? The first thing they did in my car, they put an exhaust system in that modified the gases that came out, and I think they reduced the lead content in the petrol that was in the car, being used, and subsequently there's a greater emphasis on safety, and now we've moved to electric cars. We haven't all moved to electric cars, but 20% of the market, I think they're hoping, will move. But all these changes that took place because of climate change to your cars has cost you. And you don't realise that what's happening is those costs that went into changing those cars is reflected in greater claims payouts, both in the event of a total loss or even a damage loss, and having to pay more for it. So, like the price rises of new electric cars are up here for pick a Tesla, for example, that's sitting up here as a price compared. There's probably $20,000 difference is my guess, and that's reflected also in the insurance premium. So now it all sounds like a tale of woe. Unfortunately, I'm not coming here today to give you great news, because now I'm going to face you with the problem of deciding which insurer you'll go with. Well, to make it easy for yourselves, go to an insurance broker and put the responsibility on him to go to the right person or the right insurer. But if you go to do it yourself, which my guess 80 to 90% of the people do, you've now got to look at the policy offerings of the insurer. So, here am I, someone that's been in the industry since 1954, theoretically would be able to read all the policy document and all the rest. Do I read it? Do I read it? No. Just haven't got time. I got other things that are better. As you get older, you want to enjoy yourself. You don't want to spend time reading the policy wordings. But unless you read the policy wordings, you are not going to understand what you're going to get paid for in the event of a claim. And there is no market uniformity between companies. Why is there no market uniformity? It's because they disbanded, or the trade practices disbanded what was called the tariff industry, where they all had the same wordings and they were all talking, colluding on prices and all the rest, going back 50 years. But that disappeared. So the Trade Practices Commission said, you've got to you've got to try and educate the consumer in the policies that they're buying. So to do that, you need to produce these booklets that come out with your insurance policy. So you get this pile of paper every renewal or when you buy a new policy, and you've got to read it to understand it, to understand whether you're going with the right company or not, or whether they're giving you the protection that you really expect you're going to get. So there's no common wordings, there's no common claim system. Each company works on its own. So what's your fallback? Your fallback is to appeal to the Insurance Ombudsman in Canberra. It's a free service, and the Ombudsman, after asking you to get into arbitration with your insurance company if you're arguing over a claim, they can make a determination after arbitration failed. And they're on the side of the consumer, the Ombudsman. But he's normally very impartial. Imagine the societal ramifications that I've really referred to. And you realise that the worst affected in the community in all of this is those that can least afford it. The people at the bottom of the barrel, the people that don't have much money, the people that don't have higher education, the people that don't. They're the ones that are exposed more than any of you in this room. That's my guess. There are estimated to be 75,000 properties currently exposed to risks that are starting to become either partially insurable or uninsurable. They could be in bushfire areas, they could be in flood zones, they could be in areas where exposure is too great. We've seen landlords exit the market, and I referred to that earlier. Landlords are getting out of the rental business. Why are they getting out of it? Because insurance prices are just rising so quickly, the return on their investment is diminished. We've seen some prices exceed, for the average householder, their mortgage repayment costs. You think of that. Your insurance cost is going to be higher than your mortgage cost. Example one, $2,000 2 years ago, renewal for the house. Next year, $4,000. Oh, we can just squeeze the $4,000. Next year, this year, $20,000. How would you like to be in that situation? Right? But that's what's happened. No wonder the Senate committee is meeting. No wonder the insurance industry is having to have a solid look at itself. But there's got to be a way around it. There's got to be a way to fix it. Because if we don't fix it, the exposure to the society from a major disaster, if uninsurance is, normal, the society is going to be badly affected. You know, a lot of people nowadays live in what they call, euphemistically, residential parks. So in other words, they're in what I used to call a caravan, in a caravan park. Now, the further up the coast you get, where the weather gets better, a lot of people live in caravan parks. And I think even in the outer suburbs of Melbourne, we find that to be the case. Most of those caravan parks are built in areas near watercourses of one form or another. 90% of them went underwater during the last floods up in northern New South Wales, Queensland. Can they get insurance? What would you think? Not now. So insurance has been denied to them. The market's split, as you would probably be aware, into different types. So some insurers decide they will go for a specific segment of the market. And I'll give you two examples. The first example I'll give you is Shannon's. Have anyone heard of Shannon's?
Yeah.
Insurance company?
Yeah.
Okay. Well, Shannon's are looking to write a segment of the market, and their prices are better if you can conform to their rules. Their rules might be you've got an antique car or you've got a classic car or something like that, and it's going to be limited in their mileage. It'll do any 1 year. It'll only go out for club outings and stuff like that. They specialise in that. Well, what they do is they take a part of the market out from the big pool, don't they, as a result. So the higher risks are still in the big pool, right? So the better risks are in this, get cheaper prices, but the bigger pool doesn't get the benefit of having their premiums in the big pool. Another one would be pensioners insurance company. You've all probably heard of them because you've probably looked at putting your health insurance with them. And they've been a good deal on the price, and the coverage they provide is good. But again, they're a specialist market. I remember we tried, my company tried to take them over years ago. And I remembered just to give you an idea how good the business was, at that stage, the claims payout for every $100 the insurance company received was $38. It was good business, even if you paid 20% commission. Right, so the people that are being most exposed with all of this are renters retirees, socially disadvantaged, or lower literacy people. And so, what am I going to give you as learnings from all this? Firstly, I'd say, understand your policy and do read it. That's the first one. And secondly, I'd say that the consumer legislation, which was introduced by Justice Kirby all those years ago, caused insurers to nearly have apoplexy, I suppose. But as a result of that work, there was great effort made to improve the knowledge of insurance buyers. So insurance companies started producing all these booklets that you get nowadays to tell you all about your insurance policies. My guess, the insurance companies have spent over $1 billion on those booklets. $1 billion. You might think, well, I see you're exaggerating. I reckon that's an underestimate. So the insurance company has spent it, and how much benefit have the consumers got from it? Because the Senate committee had so many complaints being made to them about lack of knowledge. APRA's comment, the lack of knowledge of consumers, continues. So we've spent all this money, and what have we got as a result of it as a consumer? But your premiums went up because it was added into the cost. I'm quite critical of some of these ideas. The major effect of all of this is that 80% of mortgage holders have home and contents insurance. 23% of public renters have contents insurance. Imagine you were in Lismore. You saw how far Lismore was over the roof, right, when it flooded, for about the 20th time. I had an office in Lismore. I can remember watching the furniture float around in Lismore. And that was in the main street. If you're a public renter and only 23% of you have insurance, what happens to the other 80% that don't have any insurance? The water's up to the roof. Every bit of furniture and stuff that you own is probably in that apartment or room or whatever it is, and it's destroyed. You've got to throw it out. You can't use it once a flood begins. A flood is disastrous what it does to all your goods and content. So they've got nothing. So who are they going to fall back on? They've got to fall back on the community to provide for it. And if you think, many tenants are forced to live in high-risk areas due to the lower rental costs. And with no insurance and being unable to replace their belongings, and your contents, they'd be buying contents insurance. They wouldn't be buying building insurance. They'd be buying contents insurance, but the contents insurance has a provision for alternative accommodation costs, and just like your building insurance does. So you can then move out of that accommodation and get into temporary accommodation. The insurance company normally provides 12 months alternative accommodation. So a lot of these people are just forced to take their own risk. They've just created a reinsurance pool, an insurance pool in North Queensland, because most people can't buy insurance in North Queensland, particularly for owners corporation type apartments and things of that nature. They just can't get insurance, and we need insurance. Councils are complaining that their development plans are being restricted because there's no insurance available. So, what are the government doing about this? This is the federal government. What are they doing about it? Well, the Australian Prudential Regulatory Authority believes that insurance companies could better explain how policies are priced and what risks are covered. A motherhood statement, if ever I've read one. And as I explained earlier, proven to be a costly exercise with the printed material that they give to consumers. I'm not satisfied. But do we, as a society that believes that in an economic model where free enterprise reigns, that we shouldn't do something as a government, because a government can create the pool. Here in Victoria, David mentioned earlier, I was involved in the formation of the Victorian Managed Insurance Authority. And the whole idea of that was the Victorian government used to go out and buy all its insurance from the general insurance market. And in doing so, in buying that from the general insurance market, we always felt that, well, it was felt that they could do better if they had what's called a captive insurance company. And a captive insurance company is where you pool all your, if you're big enough, you can pool all your business together. And here in Victoria, it was decided that under Stockdale was the treasurer at the time, that we should have a captive insurer for Victoria. So all of the risks in Victoria were pooled together under one insurance company called the Victorian Managed Insurance Authority. And that worked extremely well until I probably shouldn't say it out loud, but the government, certain governments can find, if they need a few quid, they might pinch a few of the reserves. That's the only downside to it, because you give governments an opportunity to play with the figures. But what happened during the crisis that occurred with public liability insurance that you referred to, David, public liability insurance, you couldn't even get cover for public liability insurance for your little church tennis club at one stage. So to overcome the market problem, the government agreed they would step in and VMIA would pick up the risk. We'd cover all the risks for them. And we did that for a few years until the market stabilised once again, and now everybody can buy their insurance. So it shows that it's possible for the government to do something if they've really got the ambition to protect the consumer. So it can be done. And this is an example that I provide to you. Thanks for your time. Bye.
Thanks, Rob. Fantastic.
Could I have this?
Yeah.
Oh,
Yeah, thank you.
yeah. Sorry.
Any questions? Any questions?
And to give a lot to.
I'll
Yeah.
give you the other one out of my pocket.
Yes.
Les? You mentioned brokers before, insurance brokers.
Okay,
Do
thank you.
you recommend people like myself with car insurance, etc., are you better off from the point of view of cost and then making claims? The broker will handle the claim, I would imagine. So,
Thank you.
Some brokers are good, some are bad. It's like the world at large, you've got to pick the right one. I would put it like this. my insurance has fell due. I've got 2 cars and 1 house, or 1 contents insurance, that's all, now that I'm living in this apartment. With the car, the first one that came up, I decided I couldn't understand why it had risen $1,000 in the 1 year. I thought, what am I going to do? Well, I immediately thought, at lunch with David and people like that. We all chatted about it, and they all said, we're getting quotes. Well, I thought, getting a quote, I'm not happy with getting quotes. You need to see the policy wording. But once I'd done that, I swapped my insurance from the company I worked for and had my insurance with since 1954. I swapped. That was with that first car. The second car came up, I couldn't believe it. The sum insured they were suggesting on the car, I wouldn't agree with that. I rang the company again and I swapped the second car. The third was my contents insurance, and I knew how wide the cover was. I then rang for a quote on that and found that the premium that I'd been quoted for renewal was $1,000 less than I was being quoted now. So I left that cover where it was. So that's just me who's been in the industry. Now your question related to brokers, well, a broker will take the responsibility of shopping the market for you and may be able to get you the best deal they can get and better than what you have. But you've got to make sure, again, you do ask them the question, if I'm going to a broker, is the cover as good as what I've got? The cover. And the policy wording has to be providing you with the right sort of cover. The second thing, in the event of a claim, yes, they can take over the responsibility for you, but in domestic situations, unless it's a major event, I'd say they would have little involvement.
They're more likely to have to wait from the day in getting a claim process.
No.
They could. It depends a bit on the broker.
Exactly.
I mean, if you've got a broker who's placing a lot of business with a particular insurer, then there's a certain amount.
They can put a bit of.
There's a certain amount of pressure that they can exert in relation to that.
Yeah, I'd say from that point of view, I'd agree with David's comment there. Yeah, but
John?
Look, just a comment, if you could, Ron. I've got 2 cars, both insured with Shannons. Recently, one of the cars I was driving was involved in a minor accident, my fault, and the tow truck came along and picked it up. It stayed in a holding bay for a week. Under the policy, I could have gone to Shannon's authorised insurer, or under the policy I could take it wherever I like. I took it wherever I like because I thought, well, that wasn't an approved repairer, but I knew the person who repaired the car would use genuine Mercedes parts. I waited. It took 5 weeks to get it done for a minor accident. After 3 weeks, the authorisation to have the car repaired had not been done. So it took me some time, a few phone calls, and eventually I got under a woman who said, well, if you had taken it to one of our repairers, it could have been repaired immediately. I said, well, under the policy, I said, I get an opportunity to take it somewhere else. And, that's part of your fanfare. Well, you can do that, but I said, well, effectively I've been penalised. I'm without a car. Luckily I had a second car. I didn't have a car for 5 weeks. So just, what would you make of that?
I'd just say, what's the policy wording say?
Yeah. Well,
if you go to their designated repairer.
Yeah,
And that's what I've agreed to do with the 2 motor vehicles that I've insured with Amy.
yeah,
I'll take their, I mean, I've got a repairer just round the corner, which I've used for years,
yeah.
but I won't give a damn. I'll just go where they say.
I just felt that I was penalised for taking the car elsewhere.
I'm sure. But did the policy wording stipulate that if you went to Shannon's designated repairer that you'd get a car? Did it?
Yeah. Oh no, I didn't. I took the option of not getting a car.
No.
I've got a second car. But just that the car took so long to get repaired.
Oh, I can't.
Anyway.
Yes.
Yeah, well, that's because, of course, they're used to working with particular repairers,
Yeah,
and they know how to have arrangements where they get priority and all that sort of stuff in getting the work.
And in fact, they may even only
I mean, some of them.
repair.
Yeah, and also you've got to watch the situation in terms of, well, what parts are getting put in? Are they genuine parts or are they?
well, that's why I went to the authorised, because the person who said go authorised knew someone in the panel beating industry who said they'll do it on the cheap if you go to there.
Yeah,
They'll use
well,
generic parts.
that is fact.
You got to watch that.
I don't think that's.
Anyway, just an observation. Thanks, Ron.
All right. Well, yeah, we've got something for you, Ron, before you go.
Oh,
Over here in the corner.
I hope it's drinkable.
It's drinkable, chosen by our esteemed treasurer who knows his wife.
Oh, honey.
So,
Thank you very much.
and
Thanks, guys.
Ron's going to stop. So any questions, you can have a word to him at lunchtime. And that's it, guys. Thank you.
Thanks, David. Thank you.